Welcome to our second session of FinTech HotSeat. Thank you for joining us. Gene, thank you for being willing to stay here tonight and be a guest speaker. I really appreciate that. Thank you. So tell us a little bit about your role and your responsibilities in your organization before we get started.
Sure. Well, D&H is one of the oldest fintechs. We're about 140 years old. And although we started originally printing checks, checkbooks actually, we're now one of the leading vendors in payments and lending. My role is on the payment side, and I focus on industry and regulation. And so as part of that, I pay attention to things like real-time payments and same-day ACH, as well as some of the upcoming developments in the industry, such as Swift, GPI, and of course blockchain.
Great, well thank you. And blockchain is our topic this evening, so that was a great segue. One of the things at Strategic Treasury that we're involved in doing is trying to provide information to our industry, to the counterparties that we work with, corporates, banks, vendors, different software providers. And we do annual surveys, and we have a couple, if we can switch to the slide. We do a global payment survey on an annual basis, and some of the surveys have as much as 10 years worth of history and information. So I wanted to share with you a little bit about some of the perspectives and the overall views about the current environment for payment initiatives. And this chart is the three things I wanted to point out is that when looking at the payment market, it is viewed that faster payments will be an improvement to providing services to businesses and to organizations. It is believed that it'll lower transactions costs. But one of the fear factors that we also see here is that the potential for fraud. With real-time and faster payments, we see that people are very concerned about fraud and controls. When we talk about blockchain, we asked in the survey, when we were talking with bankers and their attitudes toward blockchain and whether they thought it would be beneficial or not. And when we are seeing that 60% of banks feel like that they're in favor of blockchain and the solutions that it might be able to provide. But what we also noticed in the survey is that though they're very favorable toward it, the knowledge base around blockchain is very low. And that's, I think, felt in the corporate world as well. So what we want to do today is see if Gene can help us unlock some of the mysteries around what is blockchain and help us to better understand what is it, and how is it going to be impacting us.
Fabulous. Some of the things that we can think about around blockchain is what does it do? You can think of it as a database and a network, but instead of a database being in your organization, it is a database sort of in the cloud, that nobody owns it, that it exists as a separate entity. The other thing is that because it's in the cloud, you can connect to it from anywhere. So think about how you are writing that you're going to send $100 to Craig, and you're in Australia, and somebody says, no, this same $100 I'm going to send to my friend in Alaska, and he's in Alaska. If there is 5,000 miles between you and you're both trying to write to a database at the same time, how do you do that? That's where synchronization comes in. So somehow you have to get all of that synchronized, and you have to agree that you don't spend the same $100 twice. That would be bad. Since it started as an open environment, how do you secure it? How do you actually make sure that nobody breaks into it and changes it? And the last thing is, and this part was part of the original blockchain, that Bitcoin blockchain that was created. Next generation was smart contracts, where part of the database has autonomous pieces of code that can execute based on the event. So some of the examples that we've seen most recently, and this is to do with the Internet of Things, people have put in sensors on goods being shipped, and there are letters of credits behind those goods. And when certain milestones are reached, so for example, the sensor has now been read in this port, then the smart contract executes, and a particular component of a letter of credit can be marked off as completed. It might trigger a milestone payment. There are some other things in the contracts where, for example, you embed a temperature sensor into a good that's sensitive to temperature, or a humidity sensor in a good that's sensitive to humidity. And if humidity goes up or temperature goes up, you know that the quality of that good, polyester peanuts, for example, if it gets really hot, they go from grade 1 to grade 2 to grade 3. So you can automatically start changing the grades on these goods based on the readings of the Internet of Things sensor, which is connected to the smart contract. And the issue there is that all of the same issues of is it secure, is it synchronized, they still exist. They're not a blockchain issue anymore. It's outside of the blockchain that records the results, which is why I want to point out that blockchain is not a panacea. It doesn't solve world's hunger. It's a tool. And depending on how you use it, it will work well, it will work less well. So if you connect it to a highly suspect source, it will record highly suspect data forever. In a banking scenario, banks are the ones responsible for making sure that synchronization and security and smart contracts are done well. Sort of a segue of what can happen if you do it badly is an example of a so-called distributed autonomous organization exploit. So there is a blockchain that's called Ethereum, and it is the second most popular blockchain in the wild. So it's not used by corporates, it is a very retail use case. But 11,000 people crowdfunded around $160 million to create a hedge fund for investing into Ethereum-based companies using smart contracts. They did not test it. So unlike, let's say, Microsoft, who takes their PC and tests it for a year before it releases it to make sure there are no vulnerabilities, they build it quickly, they released it. People immediately point out vulnerabilities. Those vulnerabilities were exploited, and 30% of that 160 million was withdrawn into a different account. Now, interesting thing about blockchains is you can't run away with it. It's there, you can see it in the account, but you can't use it because somebody else owns the private key. So it is secure for them. So they decided, why don't we roll the clock back, fix the vulnerability, roll it forward, tell everybody, point to the new one, let the old one die. Well, it turns out somebody had 60 million really good reasons not to let the old one die. And so now the two exist in parallel, which is an example of why you need banks. Banks would not allow something like that to go in the wild untested. Banks would have governance where you wouldn't be working after the fact. Oh my God, this thing has happened. What are we going to do? It would be upfront, and that's why we pay much more attention to the kind of blockchains that are permissioned. So it's not open where anybody can join, is we have to sponsor you. It's the same way as Strategic Treasurer handed me the invite to their party, you'd have to have an invite to the bank's blockchain to transact work with the bank. And then in that closed loop environment, there are very significant things that we can do to make it more effective, more efficient, and faster. Because one of the major issues with these open blockchains is that the carbon footprint of such a blockchain is a carbon footprint of a small country. They're very expensive to run.
So thank you, Gene. Tell me, when we looked at that first slide from our survey that only 25% or so of the population said that they felt like they understood blockchain, How do you see the adaptation and the acceptance of blockchain coming about? Do you think that there's still some confusion between Bitcoin and blockchain and its use, and where do you see that movement going?
Great question. Let me start with the blockchain Bitcoin confusion. Last year, we all said Bitcoin is dead. We should only pay attention to blockchain. I've done some research recently, and what I've learned is that Bitcoin has actually been growing by about 100% a year for the last 2 years. And it looks like it's going to continue to grow at that rate. So what that tells me is that it's definitely filling its niche around digital asset and using digital asset to move money cross-border. Right now, for an individual person, using Bitcoin is probably the simplest way to move money cross-border if you're looking at anything more exotic than dollar sterling. What's happening with blockchain, on the other hand, is it's been going through a huge amount of evolution. So we know that Bitcoin-based blockchain is the most stable one, but also the least efficient because it was the first. And it's also the slowest moving because it is actually being used in production implementation. So it's got huge degrees of positive. It's never been penetrated. We know it runs well. You know it's not changing every day. It's got one negative. It's very expensive. Some of the newer blockchains, the Ethereum one, it's got a roadmap of 18 months of major changes to its architecture. So if you want to do a prototype, it's great. If you're thinking about building a production system, it's a little bit risky. And then we have many ones in between. We have Eris, we have Hyperledger, which points at it is a very large ecosystem. We had the conversation with Bank of Canada last week, who did a pilot using Ethereum blockchain. They've learned a few things, but they're now at the crossroads of, do I continue with Ethereum and learn a few more things? Or do I try one of their competitors and maybe learn something entirely different? Which is where we are right now. People are looking to learn. And right now, a lot of these projects, a lot of these initiatives are in the innovation labs of the banks. They're not transitioned into the P&L organizations. They haven't been transitioned into products. Where we're seeing the majority of activity is in the area I would call database and networks. And so people are seeing real problems they can automate, and blockchain happens to be not a bad tool for it. So an example that you hear a lot is double factoring. For example, famous case where a container of scrap metal has been financed 5 times at 5 different banks, right? That's okay as long as you don't go bankrupt. But if something goes wrong, that's really not good.
No.
So one solution, and this is an example of regulation, of how governments, banks, and corporates work together. Singapore Port Authority, which is a quasi-governmental organization, I believe Bank of America and Standard Chartered have agreed that they will publish key information about the contract, like the port ID. But nobody would actually know that this is this container of scrap metal. But if they publish enough about what it is on the blockchain, then when somebody tries to finance it again, people will go to that blockchain and say, oh, it's already been financed. So those are the sorts of things where money doesn't move, it's information, so it's low risk, but it serves, it provides value, it removes fraud, it removes risk from the system. Those are the low-hanging fruit of the blockchain implementations.
Okay, great. Would you speak a little bit about, and when we talk about faster payments, there's some other initiatives out there around, GPII, Global Payment Innovation Initiatives. We have real-time payments. We have same-day ACH that recently has gone live. How are those competing against blockchain, and how do you think it'll impact its evolution?
It's a great question. And I think, from my standpoint, one of the greatest things about blockchain is, A, it gave people license to dream big. So some of the questions that we haven't asked for a while, we're now asking. Some of the automation opportunities, some of the security opportunities that we said, well, it's too expensive. Blockchain is allowing us to ask that again. Now, once you ask that question, prudent business people that we are, we say, well, does it have to be solved by blockchain? Can it be solved with something that a little less risky? It's not as new. We understand the regulatory environment around it. And that's where, for example, GPI comes in. By the way, they've gone full circle. They started as GPI, they went to GPII. The current branding is back to GPI. So GPI is an early answer to blockchain. Once they saw that companies like Ripple were looking to do transfers in seconds, and today for a corporate to go over SWIFT can take days and with no transparency, SWIFT felt very strongly that they need to respond to the competition. And so GPI is that answer. The first phase of GPI is using existing SWIFT capabilities. It's really more of a rulebook change. And so it can be done right away and achieve very important results. Blockchain has moved an incumbent to provide better quality of service. Phase two, because you need to continue to compete because they evolve, and if you don't evolve, then you fall back, might actually incorporate blockchain inside SWIFT solutions. SWIFT has already looked at blockchain, for example, around distributing the membership information. Now, they decided it wasn't cost effective, but it gives you a sense that everybody is looking for, it's secure, it's synchronized, it's a database, it's network. How can I leverage these sorts of things? And so the challenge is to product managers within banks, to product managers within corporates, to come up with questions that previously did not have answers and see how these things apply. The level of development of blockchain now is that it's not robust enough, doesn't have the performance, doesn't have the scalability to take care of the real-time payments for a country. So for example, in US, with our real-time payment initiatives that are coming up, and Clearinghouse will be releasing the system in the first quarter of next year, it doesn't have enough of a scale, and it doesn't have enough of a speed. On the other hand, for somebody like, that is cross-border, where you're not looking at 5,000 transactions a second, maybe you're looking at 500 transactions a second, where you're not looking at 5-second response end-to-end, when 15 seconds or even a minute is good enough. For that, blockchain is an appropriate solution. And so as they mature, as they evolve, they will become an answer to more and more questions.
Great, thank you. One last question before we open it up to the audience. We're near the end of our time. We always hear a lot about regulation in terms of the financial industry and being able to use this for payments. How do you see regulations evolving, and do you see it evolving differently within different parts of the world?
Well, we could spend hours on that, so let me see if I can boil it down to a few bullet points. Again, last year when we talked to fintechs, or a couple years ago, they were all going to disrupt the financial industry. When we talked to them this year, they're very clear that disruption is dead. It's all about cooperation between the established and the new. So there is recognition that, we can talk to the regulators. They seem to know who we are. We have a history. We can explain things. They trust us. In US and in every other jurisdiction, the answer is it doesn't matter what the technology is. It could be wheelbarrows, it could be homing pigeons, it could be blockchains. Rules are rules, UCC is UCC, Reg E is Reg E, and you have to do what you have to do. Consumer protection is consumer protection. What they're doing is they're working with the regulators, and they're not saying take off the consumer protection. They're saying the consumer protection and other regulations have been written for 20th century. So when they were written, they couldn't even envision what we're doing. The language they're using doesn't match how we're using it. So a good example of what's going on are the sandboxes. UK has a sandbox, Singapore has a sandbox, where they deliberately exempt the new fintechs from following the regulations. Now, there is a clear understanding that for them to leave the sandbox and become production ready, either the regulation has to change or what they do has to change. But it allows them to operate without the fear of being slapped on the wrist before they are ready, before they understood, and before they became understood. So that is very powerful. In US, Delaware has decided to become a blockchain state. So Delaware has a chancery court, which is a property resolution court. And to the extent that a lot of these things are being regulated as property or commodity, Delaware feels that they're uniquely positioned to deal with those issues. So we're seeing both creating safe zones for these things to mature, states and countries stepping up saying, I want to be the digital ledger country of the future, and these innovators seeking rapport and rapprochement with regulators and banks and corporates on how they jointly work together.
Well, I have to say, I'm glad to hear that it's going to be less disruptive, more collaboration, and it's more about innovation with control. So thank you very much. And we have a little bit of time left. I'd like to open it up. Are there any questions from the audience?
Okay, is DNA doing something actively with blockchain right now? What are you doing? Are you just experimenting, or are you using that in production?
So I'll repeat the question for the audience. Can you tell us a little bit about what D&H is doing around blockchain?
And our evolution mirrors the evolution of many of the companies out there. When we started several years ago, we didn't know how to spell blockchain. So the first thing we did is we partnered with somebody in the business. We chose Ripple because at the time they were the most bank-friendly based on the analysis we've done. That analysis has been borne out. They've recently made an announcement that they did another 55 million venture capital round to continue their evolution. 12 major banks are on the governance committee building rules around the Ripple network. And we talked about how important the rules are. And so part of that's in production for us is the same way as we can connect banks and ipso facto corporates for whom the banks are the gateways onto SWIFT or onto central bank rails or onto ACH rails, we can put them onto these alternative network rails. Now, internally, when we look at what Ripple does, it's a good use case for an open network or for a club network. But what we see is that we can do more efficient and effective network for multi-branch bank or a multi-branch corporate. So we have several pilots ongoing right now. We've done a press release with Rabobank last week about how Rabobank has used our blockchain, our distributed ledger, to connect its branches in different countries. And so we can do that because we use a different consensus mechanism, so we can synchronize our ledger at a much faster pace and a lower cost. We can also create a few more value-added services around certainty and transparency. We are one of the largest, we administer student lending programs for Canada. So we're looking at application of smart contracts towards student lending positions. In our code, we've had things like syndicated loans, where you define the parameters of a syndicated loan up front and then it's not supposed to be touched again. Again, that might be a really good application for a smart contract. There, however, it becomes a bit more than just a technology, it becomes a product. Product needs to be regulated, we need to get an opinion, and so that's a little bit farther on the spectrum what we can do. So we are on the technology and capability spectrum right now.
Well, Gene, thank you very much for being with us this afternoon.
Fabulous. Thanks very much for having me. Thank you.